Alright, hello and welcome to Camel Finance. I'm your boy Camel, and it's been a while since I dunked on Ethereum on this channel, so I wanted to start with that. Look, Ethereum was deflationary earlier this year, but it's now it's now back to being inflationary again. So the volatility in rate of change of the money supply has been reinvented. So, I mean, this is what I've been saying over and over and over again ever since it went to proof of stake. I said the coin is completely owned. It's completely just worthless now. And I know a lot of people get really upset with this because they're, no, ETH to 10k. I'm not saying it can't pump. That's not what I'm saying. But what I am saying is it's lost all appeal as a hard form of money. And one of the things I used to ask kind of sarcastically and rhetorically at the same time was, if you think Ethereum is good, then tell me what the issuance schedule is. And of course, the obvious answer is you don't know, because nobody knows, because it hasn't even been decided yet. And now, as you can see, they are back to being an inflationary currency. Why do we need more inflationary currencies? That's the question I want to ask you. So don't hate me because you don't like the truth, but the truth is this is not really hard money at all anymore. Does it have a chance at being some kind of blockchain that they're going to build CBDCs on top of? Yes, that seems quite likely to me. But another criticism I have with this is an awful lot of the value of Ethereum or the Ether token is the value of the other stuff built on top of the Ethereum network, right? And since an awful lot of that is just openly garbage, meme coins, again, I know some of you like to make money on meme coins. That's absolutely fine. Well done if you make your profits. That's, you do you. But a lot of the value that sits and is built on top of Ethereum is actually worthless memes. So does that not imply that a lot of what Ethereum's value is simply worthless? I think so, and particularly now that it's back to being inflationary again, I don't know. Anyway, I say this kind of lightheartedly, but also it comes from a place of truth, right? I think we can all agree Bitcoin is superior to Ethereum. Moving on, Bitcoin has settled more than Visa in settlement volume, as you can see right here, 14.8 trillion for Bitcoin, 14.1 trillion for Visa. So this is a trend I expect to continue to see unfold. I continue to expect to see Bitcoin's settlement volume increase and start to double, triple, and quadruple the value of Visa and MasterCard. For a long time, I was a proponent of talking about how this whole narrative of Bitcoin being bad for the environment was completely false. And I'm really pleased to say, I think we may have finally put this one to bed now. It seems pretty common knowledge to me that people have accepted that Bitcoin isn't actually bad for the environment. And just to show you how not bad for the environment it is, Bitcoin's emission intensity has just hit a new all-time low at 293 grams per kilowatt hour. So how does this compare to the banking and gold industry? Well, the banking and gold are up here, as you can see, and Bitcoin's emissions are all the way down here. It feels great to finally be able to put this thing to bed. It feels great to finally be able to say, okay, we don't have to worry about any more bad for the environment type news stories. And hopefully one day the whole Tether FUD can be put to bed just like this has as well. So maybe that's wishful thinking. Maybe Tether really is a ticking time bomb. I've done work on this before to show you that I don't think it is. Anyway, let's keep going. Another thing people seem to be getting excited about at the moment, including myself, is the potential to use landfills, which of course is just a massive pile of rubbish, to harness free energy and use it to mine Bitcoin. So landfills are active for roughly 30 to 50 years. Landfill gas is around 50 to 55% methane, and for 20 years post-closure, the methane drops to 1% a year. So power generation is possible until the methane percentage is under 30 to 35%. So this means we could capture methane that just comes organically from the landfill emissions and use it to mine Bitcoin. Show me another industry that is innovating like this. I've been watching Miles and this hodl wave for a very long time now, and what I'm really interested to see is once this hodl wave rolls over, you can see every time this happened before, it led to a massive parabolic advance for the price of Bitcoin. So the question for me is this about to roll over soon? Or is this thing going to have to keep grinding a little bit higher, perhaps into next year, before it can then roll over? But one thing we do know is, once it rolls over, very good things happen to the price of Bitcoin walking forward. So I think if you look at the amount of time that has elapsed here for this uptrend and compare it to this one and this one and this one, it seems to me like we are probably in that neighborhood where we could expect to start to see this roll over. And of course, when we do, then we can expect Bitcoin's price to move significantly to the upside. So not saying we don't have to go down first a bit. I know there's a lot of bears out there right now, and being bullish is starting to become a bit difficult because I'm sitting here looking at these charts, right? And I keep saying the same thing over and over again. Above 25k, I'm bullish. Below it, I'm bearish. And as soon as we get a little wick down, as we did yesterday, I get people coming out and telling me, I told you so. I told you the thing was bearish, right? But you can be right for the wrong reason, okay? It's malpractice, as I've said before, to be bearish above major trendline support, which has been trendline resistance. We have this major bottom formation. We had the range break, and we've now come back and retested it multiple times, and we're still above it. It's malpractice to be bearish here. But like I said, you could be right for the wrong reason. If the price then rolls over and does this, then it's very tempting to be like, haha, Camel, I told you so. But this is being right for the wrong reason, because being bullish above here, let's just assume for one moment that we don't violate 25k, we do something like this. Let's just assume this is what happens. Then in hindsight, you would be looking back at this and going, well, of course. I mean, we had this massive bottom formation. We had the range break at 25k. We came back and back tested it once, twice. We didn't break down, and then we went up. Of course, the thing was bullish. We never broke back below 25k. So do you see what I mean, right? So again, I say one last time, well, probably until the next video, it's malpractice to be bearish until we break down convincingly on 25k. As I said in yesterday's video, the caveat here is we can wick it and sharply recover. That's still bullish. That would just be difficult to deal with. But so far, we've held it. And now look, we're right back into the same range that we've been in for the entire cycle so far since this cycle low was formed. As I said, couple that with the fact that we're probably expecting to see this hodl wave roll over. It tells me that maybe people are too bearish out there. Again, I'm always open to being proven wrong, but I need to see daily closes below 25k before I can start to accept that I am possibly wrong on this. So here we sit on Tuesday, and today marks the new iPhone release date. So it's going to be interesting to see what comes out of that. Have we got a $5,000 iPhone with another 17 cameras added on the back? Quite possibly. But either way, there's always a cult following that love to go and buy these things, and that is usually conducive to upside for Apple. Of course, Apple makes up a significant weighting of the Nasdaq and the S&P 500, so wouldn't it be fair to assume that this is going to have some level of impact on the indexes? History says you'd be a fool to bet against Apple, so maybe some short-term volatility, but likely I feel like this is probably going to be leading or conducive to higher upside prices for the stock market. Then, of course, tomorrow, on Wednesday, we've got the CPI inflation data. Again, this is, for me, is the biggest one of the entire week. So CPI lower, and I think we get the run to all-time highs. CPI higher, and I think we're in trouble. Of course, we have to expect some games to be played around CPI, as they always are. So maybe we'll get some chop before we get direction, and maybe we'll get chop and direction only to then be reversed by the PPI data the following day. That's a pretty standard template as well. So gonna have to get through this week without puking positions. Gonna have to get through this week without panicking and without getting emotional, as we have to for every CPI week. We've got retail sales, consumer sentiment on Friday, followed by manufacturing data on Friday, and all this sets up the Fed meeting as of next week, doesn't it? So on the 20th, we're going to get that pause. At least that's what priced in at the moment. Of course, a hot CPI print will change that massively. But for now, it's priced in that we're going to see the pause. The pause has been the working hypothesis that will lead to the all-time highs. So as ever, one day at a time. But so far, I think things look okay. I want to beat the same drum when it comes to this yield curve inversion. And the reason for that is this seems to be the one metric that so many people cling to, and it is the most misinterpreted metric that I've ever come across. Okay, people say, oh, look, the yield curve's inverted and it's way worse than the GFC and the dot-com, and it's even at 1929 Great Depression levels. Okay, that's true, it is. But does that mean the market has to crash yet? No. This would look bad, right? This would still look bad, but the market will continue to rally even if this is what happens. Why? Because the caveat to this, the thing that is misunderstood the most by retail, is this is not what triggers recessions. What triggers recessions is crossing back above the zero line. So if we do something like this, we can start to think, yeah, a recession is probably pretty close. And as we cross back above, that's where we would expect to see the markets lose critical support, roll over, break down, the VIX spike, camel to get short, camel to get long the VIX. And finally, you will see me go from being like one of the biggest bulls on YouTube to one of the biggest bears, okay? But all the while we have not crossed back above the zero line, then the thing is still bullish. I don't know what to tell you. It is what it is, right? It's malpractice to be calling for a recession here. At least wait for the thing to come back up near the zero line. Once we get up in this neighborhood, I will start to become quite concerned and quite bearish. So I'm not a perma bull. I know a lot of people think I am. I am just simply on the right side of the market as it stands, and until the data tells me that it's time to flip my positioning. Credit where credit is due. Buck here has got this thing spot on. He says, look, the last two major recessions, the market top when the 10-3, the yield curve, uninverted. Okay, so not inverted, but uninverted. And that still gives us plenty of time to reach these big numbers for the S&P, the NASDAQ, the Dow, and of course, Bitcoin. When the yield curve is inverted, no top in the market. When the yield curve is inverted, no top in the market. When the yield curve is inverted, no top in the market. It's not until we get back above that zero line that the things start to melt down. So well done to Buck here for being the only person I've seen that actually seems to understand this yield curve. Bobby has a great point here. Look, Bitcoin has closed 26 weekly candles above 25K, which was previously regarded as resistance. This is a sign of strength, not weakness. This market is highly fearful. He loves the current setup. So do I. Once again, I'm a lonely island.
What?
I'm on a lonely island with just a few bullish friends up, in my opinion. And I have to agree, until we lose that 25K level, the thing is bullish, whether you want to accept it or not. And of course, if you want to speak about bullishness, Kush here has to be paid homage to, since he is the only person I've ever seen that is a bigger bull than I am. But he says the most probabilistic outcome is a rally for the history books. The market has assigned this as the least probabilistic outcome. What a time to be alive. So are we about to see that dollar roll over? Are we about to see the NASDAQ put in this blow off top? And is Bitcoin going to follow? That has been the expectation. Bitcoin is, of course, currently lagging, but the NASDAQ not too far from all-time highs. The dollar right around that neighborhood where we should start to see it break down. So can all of this be catalyzed by the CPI and the pause over the next week or two? What a time to be alive, indeed. So hopping into the charts, we're starting off with the dollar. As you can see, we are still kind of hanging around here. Are we going to get this breakdown? Are we going to get some kind of pop-up to run the highs from back here and then work on a breakdown of this upward sloping pink support line? Of course, we'll need to see that to have a major risk on moment, but the 3-year cycle that I've been showing over and over again is down into Q1 of next year, which tells me that maybe I need to move this 95 target squiggle just into Q1 of next year. Maybe this is what's coming. So that's been the expectation. Admittedly, this move here has caught me off guard. I was not expecting to see this. But if we can roll over and break down soon and make our way down to 95, then it will have just been a slight deviation along the way. My eyes will be on the chart of truth, the 10-year yield, as you can see here. So breakout above this suggests that the Fed is not yet done hiking. But if we can get a pause at the next meeting, I would kind of expect to see this. And of course, this will catalyze major risk on moments for the stock market as well. As of yesterday, the stock market continues to do stock market things, doesn't it? So long and strong continue to push. Let's see what the rest of the week can bring. The same is true of the NASDAQ, isn't it? So long and strong continue to push, still making higher highs and higher lows. Like to see a higher high somewhere towards the end of this week. That would be perfect. And that would set up a break of the prior local high. And of course, that run to the fresh all-time highs shortly thereafter. So this is working out great so far. The Dow Jones, I really think this is going to break out this week. I think we've spent plenty of time now retesting again, chopping around. This was a big resistance for many, many months. So I think we finally have spent enough time now flipping this and we can look to break out. Once we get a breakout, Camel will be long and we'll be targeting that 38K measured move, which of course is above the prior all-time high. I've been talking on and off about seeing something like this for Apple and then a breakout. And if we can get that, that will be a long. So lining this up, consider this called out well ahead of time. Multiple opportunities to find this call out have been given. And for Tesla, looky here, okay? Tesla, not far off this big downward sloping purple resistance line. So if we can get a breakout, this could be one hell of a trade to complete this melt up move, assuming we are going to get that. So eyes on the prize here. Again, consider this another trade call out for free. Not really much to say about Bitcoin, is there? Just we're still above 25K. I'm not going to repeat myself anymore. I'm sick of hearing my own voice on that one. Coinbase, look, big sort of candle down yesterday, but relatively bullish hammer formation. And now we appear to be opening higher. So let's see. Again, long and strong continue to push. Nothing else I can do. MicroStrategy still yet to break out, but can that happen on a CPI print? Quite possibly. Riot's still hanging in there for now. So not yet stopped, but needs to close today above this horizontal range break, or we will have a bearish structure in play. And the same is true of Marathon. If Marathon can't finish strong today and tomorrow, then this is going to have to be time to hop out of at least a couple of these positions and wait for a better setup to occur. So far, we remain long and strong, hoping to see a nice CPI print. And until next time, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.